Hello guys, how are you? Today we will start from the accounting equation, that is assets is equals to capital plus liabilities. You all know that this is the accounting equation, that is assets is equals to capital plus liabilities, and uh, the explanation of this equation should be it is a fact that no matter how you present the accounting equation, the total of both sides will always equal each other. Like assets should be equal to capital plus liabilities, and no matter how many transactions there may be, the actual assets, capital and liabilities may change, but the total of the asset will always equal the total of capital plus liabilities. Or reverting to the more common form of the accounting equation, the capital will always equal to the assets of the business minus the liabilities. Assets consist of, the assets consist of the property of all kinds, such as building, machinery, stock of goods, and motor vehicles. Other assets include debts owed by customer, accounts receivable, and the amount of money, like organizations, bank account, cash at bank, cash in hand. And the liabilities include amount owed by the business for goods and services supplied to the business, and for expenses incurred by the business that have not yet been paid for. They also include fund borrowed by the business. Capital is often called the owner's equity or net worth. It comprises the funds invested in the business by the owner plus any profit retained for use in the business, less any share of profit paid out of the business to the owner. This is the accounting equation. You may present it based on your understanding, like resources, what they are, is equals to resources who supplied them. Assets is equals to capital plus liabilities. Whenever somebody starts business, we need to create few transactions based on the business. So there must be the introduction of capital in the business. Let's say on May 1st 2021, Mr. Alex started business and deposited $60,000 into a bank account opened specifically for the business. So here we use the term open specifically. That means he used it for only for the business purpose, not for the personal use. So what should be the impact of this transaction? How we will create the journal entries? The impact of this transaction in the balance sheet as at May 1st 2021, like here we say May 1st 2021, is equals like cash assets, cash at bank is $60,000. Okay, because he deposited the money into his bank account. So asset, cash at bank 60,000, and the capital is 60,000. When we will pass the journal entry of this transaction, so it should be cash at bank debit and capital account credit. So this is the same concept. Here we are explaining the impact in the balance sheet, and it is the journal entry like debit and credit. The second transaction is the purchase of an asset by check. After starting his business, he decided to purchase asset for his business. What asset he purchased on May 3rd 2021? Sorry. On May 3rd, 2021, Mr. Alex buys a small shop for $32,000 paying by check. He buy a small shop for $32,000 and paid by check. So in this case, the effect of this transaction in the balance sheet is assets will increase. That is the shop he purchased. We have to enter this in the assets. Shop $32,000